Take us through these results first, and what's your outlook given there are so many uncertainties facing the macroeconomy?
Yeah, just to take you through it. So, the great thing about the result, revenue was up 7.1%, which is actually quite very solid for ASX. EBIT up 6%. The revenue was coming from a broad base of increases across the business. Our futures business was up a reasonable amount, close to sort of double digits. And our trading services business, which is mainly the equity market and some of the technical and or information services that we provide to the market, were up sort of like north of 10%. So that has given us a solid revenue result, good EBIT result, and then as you mentioned, at the NPAT line, our result was 1.8, sort of reduced a bit from the EBIT line. That's because we actually sold an investment we had and basically did a special dividend last half. And also because RBA's rates being lower, the capital that we have support the clearing houses actually earn a bit less income. So sort of across the board, a pretty good result.
Dominic, the environment is a little bit questionable though, because while you've got stocks trading pretty close to record highs, you've got liquidity, certainly no problem here or really globally, if you listen to the latest comments from the Fed, and yet deal making, IPOs in particular in Australia, has been at the slowest start we've seen in over 10 years, and that carries on from withdrawals, in fact, last year. So how do you explain the reticence or the caution that you're seeing here?
Well, I think these things go in cycles, and if you look at the slide deck we put out, it shows that the IPO, in fact, IPO and secondary business, so capital raising as a total sense, is a lumpy business. It goes up and down. If you take secondaries into account, it was a pretty solid performance. This half probably sort of like in the middle of the range. IPOs are a bit soft, but they tend to sort of like head up and down. December month was actually our strongest month for IPOs for about 2 years. January, we saw also some improvement there. So, so we're hoping that picks up. Interesting, the global uncertainty, and this is something we've talked about for a number of years. There's certainly a lot of geopolitical and economic things going on in the world, and when you throw on top of that some of the issues that are happening in China with the coronavirus and everything, that leads to uncertainty, and that leads to people needing to do things. So, if we look through the last sort of 12 months, there's been a change in people's expectation over US interest rates, a change in people's expectations over Australian interest rates, changes in views around equity markets. They came off sort of a year ago. They've come back. So what we see is, probably over the course of the next 12 months, you've got a US election, and you've got the play out of what the effects of what's happening in China, actually how that plays through to the real economy. So, it actually means that there'll be, we think probably in the near term, continued volatility, and that sort of like feeds to the trading markets to some degree.
In that sense, how does all of what you just mentioned affect your derivatives business when it comes to demand for hedging solutions here?
Yes, it's a good point. And one thing I point out, it's always been interesting in looking after this business is the fact that there's some things that actually are quite stable through the cycle. Some things when markets are volatile, we see more trading. And then, of course, when markets are volatile and uncertain, the IPO markets and the capital raising markets tend to sort of slow down. So the good thing is, and I think that's why we continue to show sort of like strong but stable earnings growth, is because you've got that diversified number of businesses. How it plays out into the derivative markets, generally, I think over the course of the next year, we saw almost like some really significant volumes in the interest rate complex, both in a futures business and our OTC clearing business. Whether they hold at those sort of levels remains to be seen. But certainly in the first half, as I said before, futures markets were, in a volume sense, almost up sort of close to 10%. Our OTC clearing business was sort of, up significant amounts from last year. So I still see those trends continuing. And we talked in the market, obviously these are results to December, but we put out results on a monthly basis as far as volumes go. And January has been a strong month, both in the equity and and futures markets. So we see that trend for the moment at least continuing.
Yeah, that's been a huge growth area for you, right, when it comes to derivatives revenue. So do you have anything special planned for this industry, for this part of your business?
Well, I think what we're seeing here is two things. Obviously, there's reasons for the market to be volatile, but also I think the team over the last 5 years here has done a really good job in actually growing our business and growing the amount of customers that can come to the ASX and trade. We make it very easy for people all around the world to trade on ASX's market, not only just providing them access to that market, but communication services, technical services, having them put their technology in our data centre, having, providing them information and all this to make it just very easy for those people to connect to our markets. And I think what that means is if you look at the ASX, it actually, probably about 35 to 40% of the market trades in the night session. So, we're a very global market here, and the fact that we've sort of reached out to the global traders and global investors means that actually that has helped grow the business. And if you look at the numbers over the last 5 years, you can see that growth in there.